Hello, everyone. This is Dr. Duru, aka the market breadth of Ahan Analytics. So today could be a big day. I was writing earlier this month that I couldn't imagine a catalyst that would create a larger drawdown than what we already had at the beginning of this month. And in case you want some background, I put a link in the captions to an analysis that I did of the market's most dangerous months. October is the third of the three most dangerous. And it seemed like we were going to get away without much of a drawdown, but now today's action says something different, or it suggests something different. Maybe we just go back to the lows of October. Who knows? But anyway, what you're looking at here is Swing Trade Bot. As many of you know, I'm a subscriber and a big fan of this stock scanning tool. The first thing that you should notice if you've been following along is that there are bearish engulfing signals on the S&P 500 and the NASDAQ. So that, of course, immediately caught my eye. And so let's go over to TradingView to take a look at what these are telling us. So here is the bearish engulfing. You can see the red or the down candle that opens above the previous day's high and closes below the previous day's low. Now, these kind of engulfing patterns matter most at the presumably the end of an uptrend. So when something has been in an uptrend like this, and of course, the S&P 500 has been on a very long uptrend, um, this can be a signal that buyers have finally become exhausted because it gaps up at the open, where people spend their last enthusiastic dollars, and then sellers take over from there. Now, that's not the end of the story because, of course, this doesn't just guarantee a top, it's just one signal. So let's look at what the NASDAQ is telling us. NASDAQ actually is more telling because there was already a bearish engulfing that did mark a hard top on the NASDAQ in the summer. You can see that right here. And the NASDAQ got close to that high, but fell short before its next bearish engulfing. So this is a much bigger red flag that signals a potential double top. Now, again, we have to get confirmation. So, for instance, back in July, it was a little tricky because buyers decided to come into the NASDAQ 3 more days before we finally got the confirmation. So, who knows how long it will take for this confirmation to come, if it does. But this, again, is just something to watch out. Now, all of this stuff is pretty obvious, but sorry, this is pretty obvious to technicians who are paying attention to the market. But what's even more concerning to me is that we have my favorite market indicator, which is market breadth, or the percentage of stocks trading above their 50-day moving averages. I like to call it AT50 for above the 50. And you can see that since July, well, of course, the July high here is very telling, at least particularly for the NASDAQ. The S&P 500, of course, has been making all-time highs over the last few days or weeks. But this last time that market breadth was in the overbought area marked the top of the NASDAQ. And since then, there have been three, now four times that my favorite technical indicator has come up to the overbought threshold only to be rejected at some point. Each one of these moments has been bearish, but the bearish momentum did not last long. So you can see here, at the beginning of August. It was all of two more days. The longest one was, of course, the August calamity, where the bearish signal lasted. I think this was almost 2 weeks, a week and a half. This next one lasted a little longer through much of September. But ironically, again, this mattered more for small caps than big caps. And now we have this next one. So I've seen, this has happened 4 times. We have bearish engulfing again. Maybe this time actually matters. Maybe this time will be a longer lasting bearish signal. Um, I have no choice but to change my trading call from neutral to cautiously bearish per my AT50 trading rules. And I'll put a link down in the captions if you want to read up on those. So those are the collection of things that are concerning me right now about this market. Now, let's see what kind of drove. Actually, let's take a look at the VIX real quick because the VIX has also been pretty resilient. Let me change this back to logarithmic. And you can see here that it held lows around 1450 since the August calamity. And it's, as usual, the bounces didn't last long, but this one almost got above the September high. And now with today's losses, it looks like it's getting ready to run up again. So that's another warning sign. But let's see what kind of drove there was kind of a domino effect that came from the semiconductors, it seems. So ASML Holding, which is a semiconductor equipment maker, plunged 16% post earnings. Now, you can read up on why investors and traders are so unhappy about it. There was some major slashing of booking numbers, I think. But what's from a technician standpoint, what's more important to see is that this big earnings downdraft kind of confirms the top that the last earnings made. So, we got our warning earlier in July when ASML fell, what is this? 12.7% post earnings. And it never, ever not only did it never recover this gap, but it never even traded back up to the open on that post earnings day. So ASML has been in a bearish pattern since that earnings 50-day moving average breakdown. The 50-day moving average is this red line. And you could see it bounced back, it got rejected, it sold off again, it hit here, got rejected. Ironically, ASML was trying to beat this bearish pattern right before earnings, and unfortunately, these buyers really got hammered. The ones who were speculating clearly on a good earnings outcome. So you can imagine when a stock rallies into an important stock rallies into earnings and then disappoints, it's going to cause domino effects. And of course, the semiconductor complex really got slammed. So the SMH, which is the semiconductor ETF, fell 5.4%. It's still above its 50-day moving average, so maybe there's still a chance it could hold on and stay bullish. But the domino effect even hit NVDA, even though ASML reportedly said that their earnings warning or revenue warning didn't have anything to do with AI. But, but, this is a huge but. This downdraft for NVIDIA, 4.7%, is very important because it was just on the verge of invalidating the bearish engulfing from June that has marked a lasting top for NVIDIA ever since. So this is an even bigger red flag for me when an important stock, a really big stock, has this kind of day. In fact, it was about to surpass Apple as the biggest stock in market cap in the entire planet. And just really quickly, let me show you Apple. Apple went along its merry way and at one point was at an all-time high. So NVIDIA now has lost more ground. So anyway, let's go back to NVIDIA. As with all technical signals, we need to see a confirmation. So buyers turn right back around and say, hey, this is a great bargain. NVIDIA's down 4.7%. Let's buy. Then this bearish pattern or this bearish signal gets invalidated as soon as this entire candle gets reversed. Actually, that's the way I treat it. I don't think all traders look at it that way. So that's really important because again, NVIDIA is a highly watched, highly loved, much loved stock. And so it becomes very important in that way. So that's the collection of things I wanted to show as a small aside. I also wrote about how traders and investors are getting really excited about all the stimulus going into China. And I wrote that, this is all well and good, but parabolic moves like this one just don't last. They can't last. It's just the law of the market. It's like it's a law of physics for the market. You don't always know, or you can't always suspect or predict when the parabolic move will fall apart, but you just know it will. And in this case, there was absolutely no technical warning as to when this was finally getting exhausted. And part of the reason for that is that there's a lot of news here, in terms of the Chinese government playing around with news headlines and promising stimulus and under delivering and all sorts of things. Again, you can look that up if you want more details. So with that kind of back and forth, and not only, this isn't an American stock, obviously, so it's not necessarily going to behave exactly like the way other American stocks do, but regardless, technical analysis is supposed to be universal across markets. And as you can see here, there was no signal. And then once this gap down happened, that was probably a bearish signal. But given, of course, all these huge gaps up, it was hard to get truly bearish. But now today's disappointment puts the a top, excuse me, makes the Chinese stocks look like they truly have topped out for now. So this is FXI, the ETF for the China large cap stocks. And let me just end this off with Alibaba, which is the individual stock, and it has, of course, the exact same pattern. So again, what I'm just saying now, let's go back to the S&P 500, is that we have a warning sign here of tops broadly across the market. And this is just something to watch out for. The irony for me is I was in the process of identifying stocks that are in the process of bottoming. I'll have to cover that maybe in my blog. And again, I put the link in the caption so you can read up when I cover some of these stocks I think are, and maybe by that time I thought were bottoming. So until the next time, check me out on my blog, drduru.com/122, all one word, /blog. Check the links in the captions. Please give some feedback. If you have any questions, put them in the comments and subscribe to the channel for more of this content. Thanks for checking out, and I will see you the next time. Take it easy.